This is the second video for the 2009 Farm Account question. In part one of this, I went through all of the adjustments and workings from the question, and we talked about the way that we had to do all of these different workings and adjustments. Part two should be a bit shorter. I'm just going to show you what the accounts look like. Now, this is a higher level question, so therefore there might be a couple of differences from what we've seen previously. So here, first off, is our um, part A of the question, which is the statement of opening capital. Almost like the accumulated fund and suspense accounts, the financial situation at the start of January, the start of the year. So all of this information, or most of this information, is from the top sentence. 510,000 for buildings, 90,000 for machinery. That hidden investment you see is worth 3 marks because we had to work it out, of 60,000. The milk check due, opening stocks of fuel, cattle and sheep, and the bank figure is from the opening balance of the T account in the question. And then the liabilities, well, this one is from the top sentence, and then the bank loan and the loan interest, well, both of those were due at the start of the year. They're both coming from this adjustment here, which is the loan of 9,000 and the accumulated fund, the interest of 420. You add up all of your assets and all of your liabilities, you take one away from the other, and your opening capital at the start of the year is 786,680. Then we have to do, just like in the ordinary level question, we have to do an enterprise analysis account for each enterprise, for cattle and for sheep. Okay, so here we have our sale of milk from the working, it had to be adjusted, and also our sale of cattle and calves. You can combine them together or you can put them in individually. You also have your drawings of 900, which is essentially a sale as well. You have your single farm payment for cattle, 3,000, and you have your increase of stock, which was from the third adjustment I think that we did. Do you remember these increases here from the previous video? Increases of 4,000 for cattle. And in the expenses, you have your purchases of cattle. You have then your specific dairy wages, which is a specific dairy expense. And then you have these three expenses, which are the 70% related to cattle and 30% relating to sheep. So these 70% items. And when you take that away from that, you get a profit of 29,135. Then we move across to our sheep. Let me just move this slightly across. You have your sales, you have your drawings again, you have your single farm payment for sheep, you have the sale of wool, and you have an increase of stock also. And in here you have the purchases of sheep. You don't have any wages relating to sheep, but you do have the 30% numbers from that working, 30% of expenses, fertilizer and veterinary fees. You total them up here and you get your gross profit on sheep, which is 20,615. So you can see that the cattle enterprise is slightly more profitable than sheep, but overall it's quite evenly balanced. Now, what's new in this question is part C of this question asks you to prepare a general profit and loss account for the whole farm, not for any particular enterprise. So this is a new aspect. Well, you need to enter in your enterprise figure for cattle and for sheep. Those are both incomes now. So that's the answer to the previous work that we've just done. You can see that 29,135 and the other one's just off screen. And then you put in the other incomes, which are general farm expenses or general farm incomes, but not specific to cattle or sheep, which are the interest, the loan interest, which we worked out to be 1,800. This is this income here. And also from the question specifically, we had forestry premium of 1,900, which wasn't cattle or sheep related. It's just so therefore the 18 and the 1,900 go in there, and our total farm income is 53,450. But then we have these expenses. Now these are all of the other expenses on which we took off 20% drawings off each one of these. So you have your light and heat, your repairs, your 2 depreciations, and your loan interest. All of the items on which we subtracted 20% drawings. You get your total expenses and you take that away, and that gives you your net profit on the farm as a whole of 34,234. Part D of this question asks you about drawings. It says, which account other than drawings is affected by farm produce used by the family? Well, of course, that's also the sales account, and that's why we included it as a sale. Drawings are debited and sales are credited because instead of purchases, because the farm produce is produced rather than purchased, and of course then it is counted as another sale, except a sale to themselves. And then it does show prepare Barry's drawings account. Well, I've included that here, but of course we had done that in the workings anyway. That was working number 9. That's 7,304. Now, an extra little bit here. In if this was to come up as a 100-mark question, you would also be expected to complete a balance sheet, and that would be a more likely way for you guys to answer it as a 100-mark question. So therefore, I'm going to show you how to do a balance sheet. It's exactly the same as you would do for a club or for a service firm account question. We're going to go through it here nice and quickly. So you put in your balance sheet, you put in your fixed assets of land, take away the depreciation, gives you net book value, and machinery, take away the depreciation, gives you your net book value again. Now you need to include investments in there, and the investments are 60,000 euro, and that's that hidden investment from the start of the year. So our total fixed assets are 653,100. Now here are our current assets. You have at the end of the year from working number 1 your closing stock of cattle and closing stock of sheep. You have your closing bank balance, which is 50,910. That's coming from here, this closing balance here, 510. Sorry, 50,910. You have your closing stock of fuel, an income due called a milk check due, and an income due called investment interest due. All of those assets are 161 and 010. You only have one little current liability called creditors. It's creditors for fertilizer actually, of 500 euro you owe the co-op for fertilizer. Take these away to get your working capital, add that on to get your total net assets. The farm is totally worth 813,610. How do you get that 813,610? Well, you put in your capital, which is from part A. You put in your profit and loss balance, which is from part C, the general profit on the farm, and you take away drawings, which is the opposite of capital, which is the 7304, and you get your 813,610. And that is the balance sheet for this farm completed as well.